Welcome to the Pluralist Economics Journey. We start in 3, 2, 1. Traveling through time. We learn from economists of the past and present. But how to navigate the future? Are you ready to reimagine economics?
Good morning, good afternoon, and good evening, everyone. I would like to welcome you to the online debate, to the online session about understanding crisis, what to take from here for better policy advice in the future. You may know that this online discussion tonight is part of the Summer Academy for Pluralist Economics. You've just seen the trailer of this event. It is actually a summer school and summer academy, which takes place since 2017. So it's the 5th year now that we are having the summer academy, and it's the second time purely online. So each year, 100 young people, students and academics meet and discuss about economics, and they want to broaden their view and their understanding of economic phenomena. By looking at different perspectives, looking at different schools of thought, discussing them and learning all together by putting those different angles into their view, into their focus. This time it's online, I already said it. We have about 100 students from all over the world, from 30 countries with us, and not all of them are now in this call, but I hope most of them can make use and will learn from our from the perspectives that we will discuss tonight. My name is Holger. I'm part of the organizing team of the Summer Academy, and I would like to say hello to the participants of the Summer Academy, but also to all of those who have just joined tonight to follow this discussion. Over the last few days, we already had a couple of other evening discussions, lectures and panel debates. They all are online on YouTube. So if you had not the opportunity to join them in the live session, you can go to YouTube and watch them as you wish. The world is regularly shaken by crises. Some of them are bigger, others are smaller in scope. Local turmoil, military conflicts, commodity scarcity, bank runs, health threats. The history of mankind can be written as a history of crisis. 3 major global crises occurred in the last 50 years alone: the oil crisis, the financial crisis, and the current COVID-19 pandemic. However, mainstream economics does not seem to pay much attention to them. Crises are thought of as external effects, which just randomly interfere with the models used. This conflicts with real-life experience, when crises have massive consequences on jobs, on education opportunities, on prosperity, and on the health of millions of people. 2 renowned economists will share their expertise about how to understand crisis phenomena and which crisis response measures may work. They will also discuss how economics needs to change to appropriately reflect on crisis and on the real-life consequences in theory building. In order to build a more resilient and more sustainable economy, which will drive development around the globe, I guess we will need new approaches, new models, and policy advice. I'm very happy that we have 2 experts on our panel tonight. First of all, I would like to introduce and to welcome Carolina Alves. She is a Joan Robinson Research Fellow in Heterodox Economics at the University of Cambridge in the UK. She has a PhD in economics from the SOAS University of London and specializes in macroeconomics, economic development, international political economy, and Marxian economics. Carolina is also a co-founder of the Diversifying and Decolonizing Economics Initiative, DECON, which also had another spot in our evening program at the Summer Academy this year. And some of you might remember that Carolina opened last year's Summer Academy with a keynote lecture. So we are very happy to have you here again. Good evening and hello to you, Carolina. And our second panelist is Ishac Diwan. He is a professor of economics at the Paris Sciences et Lettres. This is a consortium of Parisian universities where he holds the chair Socio-Economy of the Arab World. He is also a professor of economics at the École Normale Supérieure in Paris, so you would say. Ishac received his PhD in economics from the University of California at Berkeley. And after that, he joined the World Bank, where he held various roles, including country director for a couple of African countries. He also held teaching positions at a number of universities in the US, like the New York University, Columbia University, and Harvard University. And he is a sought-after consultant with governments and international organizations, working recently on policy issues in a couple of African, North African and Middle East countries. It's a great honor to have you here, Ishac, and welcome to you as well. Now I would like to ask Carolina and Ishac, who have prepared their talks like mini lectures. So we will have twice a time slot of 25 minutes roundabout for Carolina and Ishac to present their views and perspectives on the topic raised. And afterwards, we will have hopefully enough time to discuss all the questions that you might have. But now let's start with Carolina, and I'm happy to hand over the microphone to you, even if it's virtually. And yeah, the floor is yours.
Thank you, Holger. Thank you very much for this. And thank you very much for having me here again. You guys are going to have enough for me soon. And of course, I would like to thank you, the Summer Academy and the Exploring Economics team. You have been doing a fantastic work trying to make our discipline more plural, more relevant. So well done to, it's the 5th Summer Academy. So it's just amazing. So I'm here today to share my screen here. Is it sharing or?
It's working fine, yes.
Oh.
No, it's gone
sure.
again.
No.
But
sorry. Okay.
Cool, yeah.
There? Yeah.
Works well.
Yeah, so, when of course, Holger got in contact to give this talk, I said, oh, yes, I can do it. But, to put this together, I actually realized how tough that was because we talk about crises. I've been talking a lot about the 2008 and 2007 financial crisis and the pandemic. And of course, we always talk about both of them. But, to trying to understand crisis more broadly in economic system, how the economic theory is understanding crisis is a different thing altogether. So it has been very interesting to prepare this talk and trying to put together everything I've been doing in the last 10 years or more. So that has been very challenging as well. So I have received a group of, a set of questions to guide me when preparing this talk. And I found the questions very interesting, very insightful. And when Hogan sent that questions, I decided to rearrange my talk to address 3 of them, which I think are very important. And then from there, we can expand to the other questions, but also to questions coming from the audience. So the first one is related to, why are economic crises happening, and can we assume crisis will happen again? Which, of course, the straight forward question would be yes, but when you really trying to explain why and give a convincing argument for that, it gets a little bit more complicated. So I hope I'm going to be able to do that now. And I decided to approach that question splitting the discussion into economic system versus capitalism kind of a discussion. And I hope this will help to clarify a little bit how I think we should try to understand why crises are something that is part of our society, but also part of the way we organize society, which is, right in that current historical moment, we organize society under a mode of production that we call capitalism. So so I think the first thing I would like to highlight here is, and focus on economic system first, is that in a way, economic system sometimes replaces the word capitalism. So many scholars in organizations, they in our discipline, they trying to avoid the word capitalism. So because, I see that the main reason is sometimes, some scholars and economists, they find that word very controversial. It can bring debates that are not necessary. And I'm not going to get into this today, which can be actually a talk in itself, capitalism in economics. But I would like to highlight that I'm not using economic system to avoid the word capitalism. Actually, I want to separate both and emphasize how we need to see these two things in different ways. So starting with economic system, what I would like to highlight here, and I'm going back to a lot of the work that has been doing by the project Rebuilding Macroeconomics here in the UK, is the discussion that the economy, what I'm trying to understand as economic system, is actually, it takes us to understand or to assume that the economic system is based on, social foundations. This social seems a little bit obvious, but it's important to have the, social foundations. And what I meant by that is that, the most of our meaningful actions actually take place together in groups and among individuals, right? So I know this sounds a little bit obvious, but hang in there, and I'm going to try to explain that as we move along. So what I mean here as well is that when we, what is happening is we are engaging in non-stop interactions with, those nearest to us, but also those who need care, affection, or sharing ideas. And many times, yes, we are interacting because of our material needs as well. And it's through this interaction that then we have this, we reciprocate, to create trust, we forge and share customs, identities, and so on. So I assume that many of you now are thinking, well, this is obvious, isn't it? I mean, what you're saying, that's not really new here. Yes, it is obvious. But it's also important to understand that if you understand society like this, then this approach to our understanding of society, of economic system, then have methodological implications, right? So, for example, if you're understanding society in a way I have just described, that many of you would say, well, this is obvious. So that, for example, challenge the idea of individuals interacting with each other only in the market and through prices. It doesn't really match these two approaches. If you think that what I've just said is accurate, then it challenges the idea that, according to economic orthodoxy, people make their decisions on the basis of fixed preferences. So can you see the methodological implications of how we understand social reality? So if anything, if common behaviors are forged within group, the appropriate level of analysis may be meso level, for example, and then that changes the question we've been considering, that change how we're approaching our problems. So we usually see, the economy as either micro or macro. But if you have this approach for trying to think in terms of social group, we see these small social groups, they're building blocks of successive levels of organization and very often these organizations, they are hierarchical, and these blocks, they can combine in endless ways. So basically, we don't know what's happening. So what I'm trying to say here is the most important part for us is that the social foundation, oh, I think I'm not falling here, my slides, yeah. The social foundation basically means, chaos. It means radical uncertainty. And this is really, really important, actually. So when we are trying to engage with each other in that way, if you are thinking in terms of this hierarchical social structure, if you're thinking that when you're interacting, we are creating the social structure, and that social structure is evolving.
Seems there's some sort of a hiccup. Maybe we'll wait for a couple of seconds for Carolina to come back to us. So that was the first step. She dropped out. And the second step would be she come back, I guess. So it's unfortunate, but stuff like this happens in an online environment. So let's give her some seconds to rejoin us. Yeah,
systems crisis, yeah.
Systemic crisis, a real crisis now happening. But maybe this fits well our topic. So what is our theory without the practice? And now we're having our crisis, but hopefully she can overcome it, and she's back in a second. Yeah, whoever has a question, you can also already use the Q&A tool to put a question in. And if not, then we'll hopefully see Carolina come back very soon. Yeah, where did the shock come from? Was it an internal or an external one?
I mean, she concluded, actually, she was speaking of radical uncertainty. There are many possibilities for what happened, from battery to the internet to external intervention.
Indeed. So maybe we'll give her another minute or so to come back. If it would be a longer break that she would need or doesn't need to take care of, then we could also go on with you, Ishac. But I think we'll give her another minute. Yeah, maybe we have a little change in plan. And maybe Ishac, you want to start your presentation, your talk, or at least give some introduction to it. Maybe she comes back, maybe not. But other than just waiting, would be good to have a little bit of perspective from your end.
Yeah, no, I'll be happy to jump in, and then if need be, get interrupted and come back to that, because I was really quite fascinated by the way Carolina started talking about the importance of social foundation, the importance of the various types of capitalisms, the meso level, which complicates things, compared to the beauty but utter simplicity of the general equilibrium theory, where you have one price and all individuals agree on demand and supply. I don't come from a Marxist tradition, so I read and I try to catch up. I come from a more classical tradition. I worked at the World Bank on crisis around the world. My specialty is really financial crisis, has been in the past. I've been much more focused in the past 10 plus years on the Middle East, the Arab Spring and what has followed. And that really pushed me to think much more about political economies, about groups and not just individuals. But thank you, Holger, for the invitation, and great to meet your participants. It got me to think back about crisis, financial crisis. I, like everyone around the table, I imagine I've been thinking about the COVID crisis very much, and so put some thought together on what crises tell us. But I see that Carolina's back, so maybe we should go back to her, and then I'll follow up, if you agree, Holger.
Indeed, no, that's perfectly fine. Hopefully, Carolina, there's not so much of a crisis happening, so that you can be with us.
It never happened. I had no idea. It's just literally was a power cut, and we went back straight away. But the problem was the computer to reinitiate. That took that long. I'm very sorry. Let's hope. No, let's see. Well, it matches the topic of the we're discussing.
Indeed.
We can't predict things. No, here we go. I want to give example, actually. That's why I did that.
Yeah.
Okay, let me share. I'm trying to be a little bit quicker now. So yeah, basically what the argument I'm trying to make here is everybody can see it, yeah?
Yeah, maybe you put on the presentation mode, then it's a little bit bigger, but other than that, we all can see it. This one is fine. Great.
Yeah. So basically, the argument I'm trying to make here is, we live in this evolving, evolutionary, uncertain system where everything can happen. So we have this constant refiguration of what I call building blocks. I know there calls that name as well, which ensures this kind of evolving economic system that can be, that is open to breakdowns, to crises, and so on. And we can't really predict them. But what we can do is to admit that the system is not as stable as we'd like to think. At least, so that's a good starting point. We have to understand, you can say that this equilibrium economics may be the norm. We can say that stability issues may be the norm, instead of having a different starting points. And also, if we move away from this individual framework, from the optimization aspect, from the self-interest aspect, and then we add this more open approach, where we increase the number of agents, where we see that there is non-trivial interactions in the system, then you have new, let's say, laws emerging at the aggregate level, which then it makes even more difficult to try to predict in advance what's happening, even if we have, a very sophisticated knowledge of the agents and so on. Is still very much uncertain. And, this is this kind of emergency with different levels of outcome. It makes it makes this focus on individuals a little bit problematic, which I'm kind of already bringing in a little bit the critique to the most traditional approach to economics. So yeah, so I guess my first point here for this economics/society is to make the case here that if our starting point social foundations, then of course that means chaos, it means radical uncertainty, and we have to deal with that in a different way. And there is a kind of let's say a mirror image that the way we understand the society will reflect our economic tools, our methods, and so on. So the other aspect I would like to talk a little bit more is, so we have this issue with the economic system itself, which is this uncertainty, this evolutionary dynamic aspect. But we, perhaps when I was talking about that, I gave the impression that because it's so chaotic, because we can't do anything, individuals are just watching that, we're not doing anything. No, it is actually chaotic and it is uncertain because we are intervening in that reality. And if you get someone, that doesn't have perhaps an anthropocentric approach like I'm having, you even can add to that the uncertainty from the physical world in a way. So there is that, but we as, human beings, we are interacting that reality. We are trying to organize production in that reality. And that for me, it makes me think, okay, so how we organize in society in our current historical moment, what's our mode of production, which is, capitalism. And I think it's important to have a clarity about that, because if you admit that we have a specific historically determined mode of production, and you're trying to understand what that is, we can understand the contradictions within this mode of production, if there is any, of course. So, when we start looking at the history of capitalism, we know how the history of capitalism is linked with the issue of classes, expropriation, that was very violent. The emergence of capitalism was very violent regarding the type of organization you had before, how we should organize markets before. There was resistance regarding that. This imperative of profit wasn't easily accepted by those in that current time. So there was a little bit of resistance there. So it's important to understand that, because, of course, there is, capitalism is a very young system, and although scholars disagree with that, we can probably not go before the 16th century, perhaps. But what is interesting for us to understand here, and what I want to highlight here as well, is that capitalism is not this natural condition of humanity that we like sometimes, or we end up teaching our students. And these capitalist law of motions, they have not they haven't been driving the development of history as sometimes we would like to think. And what's more, there is this link between the origins of capitalism with England, and then the link of capitalism development with new forms of imperialism, with the transatlantic slave trade. So this understanding gives us a different perspective between how capitalism is linked to human nature, to progress, to development, and contextualize, this credit that, was Europe that was lifting the obstacles to this natural development of capitalism. No, we have to contextualize that and trying to understand capitalism, the emergence of capitalism, how it was historically, considering this violent aspect in the conflict between classes and so on. And in this, I'm forgetting something. No, that's all. And a historical reality that's specific to capitalism is based on this power imbalance and contradictions between classes. Exploitation, or if you don't like to talk about exploitation, you can understand as a labor versus capital share. So we have to consider that. And if you do this, you start wondering about contradictions that are not only about this uncertainty regarding our interactions of our economic system, but also, some kind of crisis or disturbances that is part of how we organize in production right now, from crisis of overproduction, underconsumption, technological unemployment, crisis of profitability, productivity. We start seeing that from inside the system, not outside the system. So that's the other point I would like to do. So I guess, to summarize here very quickly, yes, why are economic crises happening? I just in the short answer, you have this evolutionary dynamic and uncertain system, which is combined with contradiction within our current mode of production. And yeah, you know, it will happen again. Yes, I don't think we're gonna be free from crisis, but I will finish in a more positive note before I finish my talk. So okay, so I would like to very quickly now go to our next question. The next question that was, that I faced when Holger sent me this guiding question, which was, you know, why are economic crises, why crises reflected in economic school of thought? Yeah, thought, and that is again a question that is not that simple either. I think I also was wondering how I could try to address this question in an interesting way, but also without getting to every single school, which I'm not an economic historian, so I would probably not doing that very well. So I guess a good step here, you know, in a very simple way, is to think that the reason why we have different school of economics thought is because economists who share the same perspective, they tend to group together. And what that means is that very often they share the same methodological and theoretical ideas about how the economy works. So, you know, I will not expand much on this because the Exploring Economics website is great to give us this kind of, take us around the different school of thoughts and how we have different perspectives and what is the dominant aspect in each school and so on. But what is important for us to understand here is that depending on each perspective, we have a different understanding of reality, which may imply a different understanding of crisis, or it may even imply that we don't have a crisis at all in our system. So, of course, according to different school of thought, we're going to have a different way to understand what I was calling before economic system and social reality. And that's what I think is very important for us, because if we understand that, we have to have a clarity about two aspects. One is the assumptions shaping our understanding of the economy, of the economic system, social reality. They will have implications, as I already mentioned before. And the second aspect is, if we can understand that there are different ways to understand reality, and that everything is very chaotic and uncertain, that actually requests from us to have a pluralistic approach, to understand different theories, to give space to competing theories, so we can have different options on the table to deal with our economic reality. And that point here is interesting because it takes me to what Professor Tony Lawson here in Cambridge has been arguing for ages, which is that economists, they need to know the nature of their object, which is society. So they need to know the nature of social reality. They can't not doing that. And, this is what he calls social ontology, that economists don't like to hear about it, don't like even to, we think this doesn't make much sense. But what Professor Lawson is saying to us is we have to try and understand the nature of our object, because if we do this, we then can choose better tools to analyze and understand it. That's all what social ontology is. I don't know why people panic about the word, but that's what it is. So the issue here is, if we as economists, if we don't think about our methods and you just assume them, just start using them, we then leave the presuppositions of a certain nature of social reality implicit. We leave it there, and you don't examine it, and you don't systematize. So the consequence of that, of having this implicit, what Tony Lawson would say, social ontology, is that what we have in place is a bad ontology. What that means is that it's bad, and here I'm quoting him, in a sense that of being unrealistic, of rendering the analysis that we are trying to have very likely to be irrelevant. So it's important to think about this nature of social reality, because then we can think about the tools. So to go back to our questions, okay, now are crises reflected in economic school of thought? I would say yes. How? Well, it depends on the ontological presuppositions of each school are assuming, the methods they are having. Of course, I won't be going through each school of thought, but I would like to actually take our attention to what I would probably call, what I just call this heterodox economics, which is a broad umbrella where you have different school of thoughts. And what my co-author Ingrid Kavangrav and I have been doing, trying to define heterodox economics, is exactly that. So trying to see what all these school of thoughts they have in common. And here there are 5 aspects that we highlight in one of our papers. One is to be both theoretical and methodological open, to understand the social phenomena occur in cumulative sequence, not in a single kind of general equilibrium. A shared commitment to analysis of the historically contingent character of the economic phenomena. Transformation here, we are really borrowing from Lawson here, so there is no rigidity, fixity, emergency, meaning, value, morality, again, borrowing from Lawson here. So if these features are a little bit close to reality, then we have more space to think of crisis. What we argue is that we believe these openness to alternative methods also give more space to understand and discuss classes, gender, institution, but also instability, uncertainty, exploitation, power, asymmetries. So, ecological issues. So we have more space to do this. And this heterodox perspective actually would take different forms in different school of thoughts. And again, bring Lawson here. For example, post-Keynesian economics is, we see openness, we see the uncertainty I mentioned before. Feminist economics, there's this question of relationality. Institutional economics, the question of process and evolution. Marxian economics, totality and power struggles. So, we open the analysis to help us to understand a little bit more this instability, a little bit more the issue of crisis. But very interesting here is this heterodox perspective actually is at odds with our current mainstream economics. And here I'm moving to talk a little, give a little bit of the critique to what we have in place right now, because what we have is within the current mainstream economics, we have this, if we assume that there is this ontological presupposition that hasn't been thought much, that is behind most of the methods of economic modeling, you can have correlations and event regularities, system in which event regularities occur, they are closed, so we have this closed system. And what's more interesting, within this closed system, we have these isolated individuals, we have this question of atomistic economics, where you don't have this relationality that we see in feminist economics here. There is no space, for example, here. So this is staying literally at odds with a system that's more, I understand of reality that's more open. Sorry, let me go back. Oh, sorry. Just go back to the next slide, the previous slides. Yeah. So my point here is, if we want to, of course, when you think in terms of economic school of thought, we can think that each of these schools will have a different approach to crisis, but also we can think in a broad umbrella of heterodox economics, where we see we kind of can fit in schools that are more open or they have understand to social reality that's very different than our mainstream economics, where we have the mathematical deductive modeling as one of the main tools. So this is the second question I decided to approach. And I'm heading to my last one, which is, how does economics as a discipline deal with crisis, and how should we deal with crisis in the future? And, exactly a year ago, here you go. Exactly a year ago, I gave a talk, which was why you should turn to heterodox economics, where half of the talk was about how economics is dealing with crisis. Was a focus on the pandemic, of course, but it could generalize in terms of how the how mainstream economics, the shortcomings in current mainstream economics when you're dealing with pandemic, but also crisis more broadly. So I won't repeat myself here, especially after this breakdown that I may be running out of time. So I invite everybody to have a look, especially in the first half of this talk. But I believe I should highlight a few points here regarding how we're dealing with crisis, especially with the pandemic crisis. And I will make these observations basically looking a little bit more in the macroeconomics kind of field, which is my field of expertise as well. So if you look into the mainstream macroeconomics, we are always under this general equilibrium approach. So in that framework, of course, we have the state, we have the intervention of the state is merely an institution that's supporting the market. So hence, a lot of the debate when we have the pandemic, but also the financial crisis, of the level of interventions, how to intervene. Economists, they see the state intervention just link with failures, market failures, which, we stop to theorize. We economists, not other social scientists, we have stopped theorizing about the state, what the state is, or a role of the state, or organization of the state that is now based on market-orientated kind of axioms and so on. Under this approach, we have these deviations from the basic assumptions that underpin market equilibrium are considered imperfections or externalities, so it's not really part of the system. So all the beginning of my talk regarding uncertainty, chaos is not really there. And in that context, we're always dealing with external shock, which Holger said at the beginning. Every kind of disturbance in our economies is external shock. So if you go back to 2007-8, great financial crisis, financial shock, and bank run, loss of productivity around the globe, productivity shock, COVID-19, external shock, the health kind of external shock, public health external shock. So what I see is I don't think it's surprising to see economists struggling a little bit to understand how this crisis, how the different dimensions of that crisis. You see, when economists are talking about recovery, is the W recovery shape or the V shape, is all this demand supply kind of a discussion, which I'm happy to discuss that as well during the questions time. But still, even within this kind of apparatus, we're struggling because we don't have modelings that actually are dealing with both shocks, demand and supply. Even within the modeling, we are struggling as well. We have exceptions, of course. Research is doing that, but it's not in our traditional teaching. So, and of course, in terms of these externalities in economics, we're actually trying to understand all the changes that are always conceived in this in a historical way. And then when we have this externality, then we need to understand something that actually impacts the perfect functioning of the market. So it's always this external shock happening, which also is as we talked before, it kind of limits the how prepared we can be for this crisis. So that's why my argument is that the reason why we are unprepared for this crisis is actually not only because we couldn't predict the crisis or because we've never come across with such a public health kind of crisis or such a virus and so on, but I think there's something more there which take us to our, the foundations of our dominant economic paradigm. And I separate here 2 points. One is how the economy, for economists, for modelers, the economy is not really related to aspects of society such as nature, power, ethics, which should be something that economy should be carrying, but our models, they don't approach that. And also we have, and that will take us back to the welfare theorem discussion, which again is another talk to be given on that. We economists, most of our analysis, and here is the public sector, but also private sector, we are always kind of favoring efficiency over resilience, which is also a problem. And of course, efficiency relates to minimize costs and so on. So that explains why we are so fragile in a way to deal with any crisis that hit any external shock. So yeah, so my last slide here, how should we deal with crisis in the future? As I argue somewhere else, we have to change the narrative within economics. We can't really just deal with external shocks. I think that limits our understanding of social reality. I think we have to be more open to different approaches, to be more interdisciplinary. Of course, now with the crisis, the pandemic, you can see economists like pairing up with epidemiologists, or even economic epidemiologists now that has always been at the margin are kind of being in the spotlight now. So that's is a progress. And I think what's very important here is like to see the difference between not being able to predict the crisis, which is the first part of my talk, then how that's different from not actually considering crisis at all, because our apparatus, our methods is based on this closed system where we have this harmony and so on. So I think this is all for now. I'm very sorry for the technological problem if I have to hurry a little bit. And yeah, that's all from me.
Yeah, thank you very much, Carolina, for this talk and the insightful thoughts that you've shared with us. Now, I would not want to talk a lot in between, but just hand over to Ishac for your comments and your thoughts on the crisis and how to deal with crisis, actually.
Thank you. It's really great to follow after Carolina. I've learned a lot, and I think I agree a lot that we need to use heterodox methods to understand reality, and that we have to adapt our tools, our methods to the question that we're posing. So I want to start by reflecting on what are interesting questions when we see a crisis. How do we think about a crisis? 3 ways. Then a few words about the financial crisis and the corona crisis. And then I want to describe maybe in a lower way than Carolina, more structure, add a bit more structure to what she was saying, some new emerging school of thoughts or particular domains of economics, broadly of social sciences, that are emerging because of these succession of crises. And then in terms of the future, I also want to be a bit more down to earth, I think, and recognizing that big uncertainty. Still, I think there are some clouds on the horizon that I want to put on the table, and conclude with some thoughts about not just happiness in rich societies, but what is happening there imply for the old debates, north-south, and the challenges, I think, for thinking much more about the north-south aspect. Typically, I love numbers, and I would show you lots of graphs, but we don't have time, and I didn't have time to put them. I was following the Lebanese demonstrations today. I'm from Lebanon, so this is my email. I challenge you to look for the graphs, because they really, when we're talking about macro phenomena of inequality, globalization, and the like, the rise of the 1%, there are some figures that speaks very loud. So I encourage you to search for them, and if you don't find them, you're welcome to contact me, and I'll help you if you're interested, of course. So I'll run through a few slides, and 3 ways of looking at the crisis. There is the economistic way. GDP falls. By how much does it fall? And there are economistic ways of describing that, and I agree with Carolina. Classical theories is not about crisis, it's about equilibrium. And so there are some innovation in macro about trying to explain cycles, and once some of them explode, but it's an economistic approach. A question that one is led to look at whenever there is a crisis is the political aspect of it, of its resolution in particular. Typically, there are losses that need to be shared socially, and there is a fight there is often a fight over the distribution of losses, which leads to a political crisis. So a shock could be absorbed by a resilient system. And maybe if the system is more efficient, less resistant, the shock has bigger effects. But then how is it absorbed socially? There's typically a political fight, and it's that fight that in many ways is the crisis, because if it's a class struggle with workers united to refuse lower wages, and the state printing money to finance its deficits, and then we have unemployment, we have hyperinflation that makes the cut in production more pronounced, and so the crisis is deepened by a political fight, actually. So that's a way of thinking about crisis as after the shock. But then you can also think about a third way, a more complicated way, a more useful way also, is to think about the reasons why crises emerge or are of high magnitude. So what are the systemic elements in a particular type of capitalism, let's say, in a country or globally, that gives rise to these shocks. And so in many ways, crisis generates intellectual revolutions, not immediately, but over time. I mean, you could think of the financial crisis of the 20s of 29, leading to the New Deal in the US, to also the Bretton Woods system of mild, the pushback of the globalization, of the first globalization. We could think of World War II perhaps as the beginning of the silent gender revolution, because women went to work and would not want to go back home after. We could think of the financial crisis of 2008 as leading to the 1% movement, the realization of this huge inequality inherent to the system and the need for the system to change, but also of populism and the coming of Trump. And so those crises make us think about what different system could actually avoid them and systemic change. So if I think of very quickly, perhaps, because I have to rush, of the financial system of 2008 and of the recent Corona crisis, the A view would say, we had GDP losses. You may have seen that beautiful graph, how with Corona we had very much a V-shaped recovery in the rich countries of the West. The financial crisis was as deep, about 10% cut in GDP in rich countries, but it was a U recovery. It took 3-4 years to recover. It's harder to fix probably a financial system than to deal with a quick shock, especially if you have the fiscal and monetary means to borrow and to attract global capital to ease that shock. The question is going to be, of course, this accumulated debt, what does it do in the long term? The B view, the second view, which is about how these shocks were affected different types of groups, is that both were actually quite unequalizing. That is, power structure get reflected during the distribution of losses. Now, there are differences. The financial shock hit much more, the financial crisis, the rich countries. The poorer South, less globalized, less capital flows going into the South, was less affected. But in the North, let's say in the rich countries, the shock was unequalizing and revealed also how even a progressive, so to speak, Obama fixed Wall Street as opposed to fixing Main Street. Many people lost their houses. It started from the housing market, but most banks were bailed out. Now, the COVID crisis is different in that it is ending up at the end hurting much more poor countries than rich countries. Poor countries are barely vaccinated. The crisis is still going on there. And Capital flows also revert very quickly to rich countries who attracted them. When interest rates rise soon, we're going to see a huge crisis, a debt crisis of developing countries rolling. And within rich countries, poorer people were hit worse. They were not connected to the internet, or they are in the informal economy. They didn't have access to safety nets. So a distributional views still fits that the powerful tend to pay less. Now, perhaps one question is, how come the financial crisis was resolved so quickly? When we see other financial crises, say I know some Brazilians are online, the Brazilian debt crisis of the 80s led to a lost decade. It was much harder to solve. Similarly, the debt crisis in Lebanon today is a huge political crisis, and it's very hard to absorb those losses. And there are really 2-3 reasons for those differences. One is, as I said earlier, the rich countries can attract more capital in order to solve, say, banking crisis, and attract them from around the world. The United States, for example, has been running a big trade deficit, meaning is a big borrower, plus they print dollars. The second reason, though, is that labor is less organized, so it takes the hit quicker. Unions have been weakened enormously over time. And in all these crises, one beautiful graph to put your hands on is to see how the labor share that Carolina, dips with a crisis. That is, the share that labor gets as revenue from production, from GDP, comes down, showing that it's really labor that pays for the losses much more than capital. And that reflects the very unequal relationship or mobility of capital and labor during crisis. Capital can always threaten to flee out of the country, especially financial capital, while labor is stuck. It's just that it takes longer for this resolution to happen when these distributional fights take longer to be resolved. Now, with COVID-19, there is an extra element that was added to the mix, and it's not just economics here. Health performance was also very important, and when you look at the economic and health performance of countries, and you ask, how were they different? Actually, rich countries did not necessarily do better. Democratic countries didn't necessarily do better than autocratic ones, even though China and others had a zero COVID strategy that worked. But there were other autocratic countries, I don't know, Iran, or Eastern Europe, that didn't do so well. And when you look at the correlation, actually, the element that comes strongest in explaining good economic and political performance is trust in government. Countries where people trusted government were able to put together more cooperative strategies that more quickly allowed social distancing to work and to stop the virus circulation at low economic cost. And that's an interesting addition to our heterodox, let's say, set of tools in understanding how crises are resolved. Now, what do these crises reveal? Third type of systemic questions. The financial crisis really revealed in the big light the kind of dark side of globalization, the fact that it was explained in the US as too much credit to the poor to buy houses because because inequality has been rising extremely fast in the US over the past few decades. Actually, the wages of the unskilled workers were literally flat over the past 30 years, while that of the educated rose constantly. The return to education went up constantly, and the share of the 1% in income and wealth increased extremely fast also over this period of financial liberalization and globalization. So in order to offset the political impact of that, credit was pushed to the poor, and that led ultimately, it is said, to the financial crisis. So the inequality root of the crisis was exposed, and this really led to much more focused among economists and social scientists on inequality, on the size of inequality and on the causes of inequality as well. And the COVID-19 crisis went beyond that shock on thinking in terms of a word of inequality, to also put on the table a crisis of democracy, which has been brewing for a while. That democracies are short-sighted, they are not able to actually build resilience ahead of time to protect themselves from, they increasingly have short horizon, electoral horizon, they are not decisive in taking actions and the like. This discontent with democratic movements being recognized, and it became more apparent. Also, this north-south, but also east-west rifts have become much more apparent. North-south because of the South not getting their vaccines, East-west because of the multipolar world, with China emerging as a model, as an autocratic model, and increasingly exporting that thinking. There was also maybe an awakening or reawakening to the possibilities of dealing with climate change. We could actually consume much less, burn less, and survive. And it is quite possible that the global climate movement would come out stronger and with new ideas out of this crisis. So potentially a lot of silent revolutions could emerge from these two crises. Now, in terms of economic thinking, I want to highlight here, maybe to conclude, what I see as the innovations and the new domain of thinking in economics. As Carolina said, neoclassical economics doesn't have much to say about crisis, a bit at the margin. Even understanding how crises are resolved is difficult when you only focus on individuals affecting general equilibria. I mean, it does push you to think about politics, as I said, and therefore about groups, group interactions, political economy thinking. And certainly the financial crisis has pushed for much more thinking about political economy and inequality. So in terms of change, I've outlined 5 domains. One is inequality, recognition that inequality has been rising in complex way around the world. I think the best summary is this Milanovic elephant graph. If you don't have it, you should see it. Basically, it shows that as a result of globalization, and I'll speak a little bit more about what this means, in the past 30 years, we've seen a reduction in poverty in some very poor countries that have benefited from globalization, such as Chinese farmers that moved to become workers in factories. We've seen important losses in the middle classes of rich countries, and we've seen very big gains among the rich of rich countries. And that's kind of the shape of an elephant. The work of Piketty is also very interesting on the rise of this 1%, which is enormous. You know the numbers. It's good to see his figures in terms of wealth. It's extravagant what rich people and companies command in terms of wealth. Now, what's interesting are all the debates on the drivers of this inequality, and a lot of research has been asking: is it trade? Is it the movement in trade, the movement of production to poorer countries? Because conceptually, this reduces north-south inequality. It increases inequality in the north. You know, the middle class loses their jobs to workers in poor countries, but it reduces the inequality between the north and the south. So is it that? Is it capital flows? Is it capital leaving the north to the south to where wages are lower, and what is the impact of that in terms of generating financial crisis? Or is it, third hypothesis, technological change, which actually saves on labor and increases the return to skills and to capital, and can also generate the kind of inequality we're observing? There are big debates going, and all of this seems to be important, and I'll speak a bit more about these various channels. Now, a second domain where a lot of work has been done is about how policies are adopted. It's not this government that represents the people that seems to be doing policy, but it's increasingly the 1% that is affecting the way politics is done through lobbying and even buying politicians. And there's all this literature about crony capitalism, to which I've contributed quite a lot by focusing on the Middle East in particular, where you have an alliance between business and politics for various reasons. In the Middle East, it's quite extreme. Basically, autocrats are uncomfortable with the market because autonomous agents could question their authority, so they pick their friends to be the heads of industries and the like. And that leads to a very inefficient crony form of capitalism, talking about types of capitalism, and also to support for autocracy, and therefore low social mobility, no voice, and increasingly, as people get unhappy, repression, violent repression, and ultimately led to the Arab Spring, and we're still in the chaotic period that followed that. Beautiful graphs by an economist called Philippon on the rise of monopolies in the United States. The United States is a country now that's where markets are extremely monopolized. Actually, Europe is much more competitive. On trust in democracy, also there's been very interesting work showing actually how in rich countries, the youth increasingly is disenchanted with the democratic system. And there's a whole agenda about how to reconstruct more popular democracies that are more representative of people's interest. Now, the third area is that of capital movement. As I said earlier, monetary policies in the rich countries attracted capital from other countries, and this is leading to very elevated levels of debt in rich countries, and big uncertainties about how those will be absorbed. Over in the past, high level of debt has led to important financial crisis, because the crisis is also a way of reducing debt by closing capital movement through inflation over time. And that's also redistributive, because big capital can move much more than savings. But the big news that you have to watch is that there is now a pre-announced, literally, a debt crisis of developing countries on the way, a tsunami possibly. When you do simple projection, I'm talking about IMF projections here, you have close to 100 countries that would be in a debt workout mode in the next 2-3 years, and therefore subject to IMF conditionality for many years. And so we are moving to a world where debt crisis in developing countries are literally predicted, especially if interest rates rise in the rich countries, in the US in particular, as they're expected to do. Now, the fourth debate is on technology, the effects of technology. It is now recognized that it's the main source of inequality. Now, if we think about it in the absolute, if we have robots doing the work for us, we should be happier and have more leisure time. Unfortunately, so one could think of policies where technological change, labor saving would be good. For example, you can nationalize all these industries. But then we get into the issues that are discussed in this literature about incentives to innovate, to what extent is the market needed versus, say, Mazzucato's work, very interesting, that shows the role of government is extremely central in innovation, and that the private sector only does the last mile. it also reopens the debate on North-South conversions, because Southern conversion, as has happened in the past 20 years, but has stopped now, is very much on the basis of their comparative advantage in labor. If they lose that advantage, as they're losing this advantage because robots are not doing this job and industries are relocalizing in the north, then what are the elevators of development if export-led growth doesn't do that anymore? And already we're observing deindustrialization. In the rich countries employed up to 30% of their labor in industries before this went down and people moved to services and to more creative jobs. Now we've seen this deindustrialization happening, say, in countries like India at much lower levels, or Brazil at 10 or even less % of the labor force. So big question there. And finally, how to govern globalization, especially the COVID crisis, but also how to govern trade, how to govern capital flows, illicit flows. This is an area of big debate. I recommend that you look at Roderick's trilemma, where it's now recognized that you cannot at the same time have democracy, sovereignty, and open movement of goods and capital in particular. And so it makes more sense of groups of countries coming together, say European Union, to define norms, but then this is also erecting barriers that make it more difficult for the South to grow. There are other innovations that I won't speak about. I mean, obviously, there's a lot of work on climate change, and there's new techniques, behavioral economics, experimental techniques, but I find them less important perhaps from a conceptual perspective than these 5 areas. Just to conclude my last slides, clearly these crises are here to stay. I mean, we are in a very unstable world with global governance becoming multipolar and not very cooperative, with this technological change posing lots of questions of inequality within rich countries and across North and South, with the clash of governance systems and the unhappiness with democracy, with climate change in particular, which is existential. And a lot of thinking in the North about how to deal with these various issues, groups emerging, affecting politics, reforming democracy, reforming education, access to services, regulating better, new philosophies to consume less, taxing capital, the Tobin tax. There are all kinds of proposals. So we could imagine, if we're lucky, that the North will start sorting some of these problems, maybe avoiding crisis or crisis precipitating solutions. But what I want to stress as I close is that many of these northern solutions actually come at the expense of the welfare of the South as we know it. Higher interest rates to prevent a financial crisis in the North is going to cause, as I said, a tsunami of debt in the South, in developing countries. Higher protectionism to protect workers from globalization, to bring back capital and relocalize it, is going to reduce growth opportunities in the South. And even quotas to reduce climate, the warning of the consumption of CO2, which makes sense, is also going to hurt trade. And if quotas are imposed in the South, poor countries won't be able to grow by polluting as rich countries did in the past. They have very small imprint and won't be able to increase it. And so all of these solutions are actually not very helpful. The North is literally now starting to build a wall to prevent refugees and labor movement, but at the same time, if the South is not vaccinated, COVID will mutate, will come back north in different forms. Refugees will be dying in the Mediterranean, as we see now, and they'll be burning wood and increasing CO2 emissions. So not finding a solution to this north-south rift, to that very likely possibility of diverging path between rich and poor countries is certainly going back to haunt the North. But I see very little thinking these days, perhaps because we've seen 20 years of convergence and all these debates about development strategies are not as dynamic as they should be now. I'll stop here.
Yeah, thanks a lot for your talk and the slides. I mean, it was very much information on it, and you covered the broad range of aspects. And I think we'll be in discussion about many of those aspects and now in a second. You may have seen there's a couple of questions already put into our Q&A tool. And I know that Miriam, who is now with us and shares her screen, no, not the screen, but the view actually, the camera. Hi, Miriam. Please ask your question yourself so that we can, try to get an answer from Carolina and Ishac.
Yeah, thanks a lot for the very insightful presentations. Hi, Carolina. Hello, Professor Diwan. I was wondering, as both of you were talking, you already mentioned some aspects, Professor Diwan, but I was really thinking, how would you conceptualize the COVID-19 crisis from a pluralist perspective? So how would you say that different views of economic or socioeconomic phenomena, theoretical views, help us explain different aspects of the COVID-19 crisis? So I was thinking of feminist economics helping us understand the differential impact of the crisis on women, where there's a lot of empirical evidence that we're seeing that, right? How would you say that post-Keynesian Marxist, neoclassical, institutionalist, I don't know, any pluralist approach that you would think of helps us conceptualize this specific crisis, as opposed to the financial and economic crisis, where I think we have seen a lot of work already? Thanks. So I would really appreciate if Dr. Alves and Mr. Diwan would share their insights on that with us. Thank you.
Yeah, thanks for the question. Who would want to start with giving an answer to that?
I'm sure Carolina would know much more than me about how to answer this question.
I think
I will add something at the end.
I think Miriam put me on the spotlight here. Though I think the conceptualization of the crisis, I mean, from this pluralistic perspective, I think there's one, we like to mention the Bill Gates TED Talk, I think from 2012 or whatever, where apparently he predicted the pandemic. I haven't seen the talk, but, you know, it's in everywhere that he knew what was coming and so on. And I think, although we can think that, you know, that was Bill Gates, but if you think in terms of the more pluralistic perspective, if we were giving space, for example, to ecological economists, I think it's called, or even the epidemiologist economists as well, they also have been talking about that possibility of crisis, especially the ecologists looking to the global value chain, the distribution, the labor division, the global level. They are looking to that, and they are predicting some kind of more, you know, a crisis similar to the pandemic crisis. And if you go back to these papers, and some of them actually goes back 20 years ago, they are criticizing, or they are trying to perhaps not conceptualize the pandemic itself like it happens, but predict that pandemic, saying we can't really have a focus, for example, on this reduction of costs at the international level, where we are favoring efficiency and low cost, and then we are engaged in this global value chain of supply, which can be a problem. So this would be a way to kind of force us, perhaps, I don't know, I would say, probably post-Keynesian could contribute with that, institutionalists, but even Marxists, trying to understand the aspect of production from the cost perspective. You know, what we're looking at, because what we have to consider here, I would say, especially perhaps for Marxist approach, but the post-Keynesian as well, is the question of cost and profit and how we conceptualize that, because that's what is behind, that was what was driving this division of labor at the international level. So I think these economists, ecologists, economists, they are, political economists in a way, they are getting to that discussion, which I think is interesting to go back to them and not only see how they are predicting, but what they're having as an alternative there. And I think institutionalists, the way I see perhaps is more about the after events. I think there's a lot of discussions regarding which kind of institutions we have within capitalism and their role. And I think, for example, I mentioned a little bit the question of the state. And I think if you step away a little bit from the mainstream economics, the neoclassical economics, where we have economists, political economists thinking, what is the role of the state within capitalism? What the state should be doing here, actually. And that actually assume some of the inequalities we have within capitalism regarding income, gender, and race, where capitalism itself perhaps can't, or the market can't really find solutions for that. So these inequalities, they exist before the pandemic. And there are some schools of thought that you mentioned that were dealing with that. So I think perhaps we have to go back to some of these schools in terms of how they are already dealing with inequalities that have been exacerbated by the pandemic, but they are not itself the result of the pandemic, and then get into that discussion in a way. I think Professor Ishac said a lot about the impact of the pandemic on the poor within developed countries, but also at geographical level, the global north versus global south. So again, there is a literature more in a heterodox perspective, development economics, that are actually theorizing this global development of capitalism in terms of this unequal and combined development, where the global south is in a much weaker position. So again, this is not related to the pandemic itself, but give insights that when we have a crisis such as the pandemic, we know that these countries, they would be in a situation that Professor Ishac has, kind of clarified so well. So I think perhaps more than conceptualize the pandemic from a political perspective is perhaps to go back to these schools, how they are already understanding some of the inequalities that were part of the capitalist system and the instability that is also part of a capitalist system, and see how we can pick from there. Sorry, Miriam, that was a hard question.
Thanks, Carolina. Ishac, do you want to add on it?
Perhaps I'll add a little, and then time is closing, we'll move some of the questions on that. When I looked at the data, I wrote a paper recently on COVID. I was thinking that what's interesting is to look at this trade-off between livelihoods and death, right? There's countries where maybe the profit motive is higher, would want to keep the economy running, even at the cost of people dying, maybe among the poor, if they can't protect themselves or so. And so I've looked at kind of the health performance and the economic performance of countries, and you'd expect a negative relation. Those that would do well on the economy do bad on health. But actually, and probably this trade-off obviously existed within countries. But when you compare countries, actually the relationship is very strongly positive. Countries that did well on saving lives did well on saving the economy as well. And so the big thing that comes at you is somehow the capacity of some countries to deal with shocks and the incapacity of others to deal with multiple. This was a very complicated shocks because you had to keep people at home, deal with hospitals, close the border, get a safety net together, support businesses, monetary policy, and it's multiple functions working at this like a war. And countries, as I said earlier, that did well are those that had a higher level of trust in government, not democratic or autocratic, but the ability to quickly convince the public that we're in this together, stay at home, don't transmit the virus, let's do that quickly and move on. And it does take trust because, say, living in France, and maybe it was the same in Germany, I could see that, you know, when the government announces closing this or that, political parties or groups would come against that, saying this is for political motives, you're lying, this against freedoms, and the like. People are not willing to trust that they need coordinated action for the social goods. For example, what we've seen in many countries, in France also, is that initially, you know, serious social distancing policies were not taken until hospitals were filled up to top capacity. You could have closed it a week before because you saw that coming, but somehow people could not be convinced before they saw the ravages that are being done, that something as radical as having to stay at home and not go to work was perceived to be. And so, you know, to me, it brings back governance and issues of democracies very much to the fore of the discussion. Now, there was a few questions on debt and on also the growth potential of poor countries. I mean, you could imagine that in an imperfect world, it's very hard for the poor countries to grow without having access to export market in the rich countries. Now, in an ideal world, you could think, you know, if they're allowed to imitate the technologies of the rich and to have some support to quickly educate their population properly, then, you know, they could quickly catch up with the global frontier, and we wouldn't need all this trade to produce elevators. But this is a little bit far-fetched, and it seems to me we need serious thinking about from our, you know, participants in Brazil, in Mexico, in poor Asian countries, in the Arab world, about how could these countries actually join the international division of labor in ways that benefits them. Now, they would also need capital, but capital to poor country is extremely hot money and fickle. It comes and leaves very quickly, and so generates a lot of crisis. And this is in large part because there is no global governance of capital markets, the way you have, say, at least with WTO, for the World Trade Organization for trade. You cannot impose actually norms and the like. And each time a country cannot repay, you know, there are negotiations. Of course, the IMF plays a central role, but this is kind of the only mechanism that exists. The IMF just issued SDRs, so special drawing rights, to help all countries around the world have more liquidity in this particular crisis. Now, the price of debt of developing countries, emerging countries, shot up because now all bondholders, Euro bondholders, know that they will get repaid next year. Now, we still know the year after there won't be enough money, and we're likely to have a crisis unless there are new injections. But what's important here is that these injections, which are supposed to help countries get vaccinated and support the poor, are actually going to serve to bail out bondholders in rich countries. And the IMF cannot do much a priori to prevent that, even if they wanted to. And so we sorely need a system that regulates capital flows in a better way, some sort of international court or something like that, that would be more democratic, say, than the IMF at doing that.
Holger, can I add something to what Professor Ishac has just said? I think
Please
it's
go
really
ahead.
important, that international aspect, because, and it really also goes back to what Miriam asked regarding, you know, how these different schools can help us, because I think what Professor Ishac is saying, and something that the historian Adam Tooze also is pushing, is nowadays this kind of international macrofinance or international macro, which has nothing to do with nation states or state or this more fiscal and monetary policy at the national level, but it has to do with, you know, the balance sheets of big corporations, capital inflow, outflow, and in that sense, even within the heterodox school, apart from this international critical macrofinance, which is flourishing now, the BIS, we don't have, you know, really a structure or a conceptualization trying to understand that. We're still very much stuck to the macroeconomics in a Keynesian sense in this nation state, and that's another struggle. So Professor Ishac is spot on to the question of governance, democracy, and how the economic theory would kind of follow this international, kind of globalization that we had. Yeah.
Yeah, certainly. Thanks, Carolina, for the addition. So this speaks to the one point of democracy, of the political institutions, about getting society back into the focus of economics. We also have a couple of other questions, and I apologize that we are already a little bit over time, but maybe we'll have a couple of few more minutes to discuss them, because we have some very, very good questions also on on whether the COVID crisis is the new normal actually, and whether we should be thinking about treating this situation as a new standard to work on. And the question is, how can economics look at it if the world is changing in such a radical way? I mean, we've talked about the finance streams and about the finance market in terms of coping with finance, with COVID actually. But you also said, Professor Ishac, on the unemployment of the poor in the richer countries and the consequences of COVID on the less developed countries in their economic perspectives. And so the question is, if this is kind of a new normal, how actually can it be kind of reflected in economics in the different schools that we've discussed on? And on the other hand, what would be political advice? What do you advise to the governments for how long should they kind of use the COVID scenario as their base scenario actually to move on? So maybe we can cover on those questions a little bit.
I mean, on schools of thought, I would refer to Carolina to educate us, because she studied those and she masters them. I mean, it seems to me vaccination is the key, and COVID is likely to stay and to mutate, and so vaccination is also here to stay. But just thinking of herd immunity is a catastrophic scenario, cost to pay, and especially if COVID keeps mutating, it's just letting people die forever. So vaccination is central, and and the fact that 1% of Africa is vaccinated today, when we're approaching 50, 60, 70% in each country, just lays bare the enormous inequality and even hypocrisy of talk about global solidarity. And also the short-sightedness of the system, because it's mutating there, it's going to come back. And it poses big questions about intellectual property rights and the right of drug companies to earn billions now, especially that initial technologies were subsidized. And it is a current issue. It's going to take a while given the delays, but the question is not going to go away. The broader question is how to make technology available globally when it can serve the welfare of everyone, instead of keeping to the argument that we need a return on technology to generate incentive to create it. Carolina?
Yeah, I will start from the last point, which is the policy making, political advice. I think, and I'm going to go back to what Professor Ishac has already said in a way. I think my first point would be, there was this kind of let's call a fake trade-off between health, economic outcomes, civil liberty, which Professor Ishac has already talked so much, and I think that was sold to us with no base at all. And actually, as we know now, with studies coming up, that actually countries that favor the total elimination and lockdown and really trying to control the virus, or the one that were able to have the recover, that are actually going back to GDP pre-pandemic levels, and they have recovered, they have better economic performance and so on. So I think for me, I really, and trust me, I'm trying to do this, I really would like to know where this myth, this trade-off between health and GDP, where this come from? Where did it come from? Because if it come from policymaking relying on economic advice, we have to get to the bottom to this, because that pandemic, that public health crisis wasn't the first one. We know it wasn't the first one. Again, it's not the Bill Gates TED talk, but if you go back to ecological economists and other political economists, they are talking about that kind of crisis more often. So we need to work that out. I think one, in terms of new standards, I think we should bring to account why we had that myth, especially now that evidence is saying to us that the myth didn't exist. That was a fake trade-off. So I think it's my first point. As an economist, I'm very curious about that, if that really has a scientific base, a theoretical economic base that was used to sell as that trade-off. So this is the first point. I think in a more macroeconomic realm, there are a few things that I would like to become perhaps a new standard, or I would like a change in we saw in policymaking, but I would like that to reflect in academic macroeconomic teaching, which is how we understand spending. We've been, especially in the UK, we've been going through, all this kind of narrative about austerity, we don't have money and so on. Then you have the pandemic. The money, well, someone who came up with the money. Of course, there's the issue of debt and etc. I'm not saying that we don't have to be concerned about that, but I think there is something about going back. Sorry that I keep all the time going back to the economic theory, but I think this is important. What we've been teaching to our students is very important. So I think we have to go back to this question of spending, fiscal policy, debt, because we are definitely not really, as economists, especially at academic level, I still think we need to revise a few aspects of that. Together with that, I would also consider the issue of inflation, which is still, the hot topic in many countries. Will we get inflation or not, especially the US, the UK, in all this comparison with the 1970s. And here is another thing that I'd like to say. Of course, history is important to have to go back to different crises, but we have to use that to inform ourselves, but we have to consider our current context. The context we have now is so different from the 1970s to then argue that you're going to get inflation again the same way. So I think that is also the outcome of a perspective to inflation that is very supply side kind of take, which also, limits our understanding of inflation. Inflation is always related to price, CPI, but we know we're looking to financial assets inflation. How are we going to do this? I mean, the inflation, the spending, I think are really topics we have as a macroeconomist to, I think the question say new standards, right? To go back and see new standards, because what I see from the 2008 and 2007-8 crisis is that at the policymaking level, we had a lot of very innovative and different policies, but have these policies really reflected change in academic level? And sometimes I'm not so sure about that. And the final point, which I think Professor Ishac said, really grasp that so well, is that kind of dynamics between the global south and global north, especially when it comes to finance and capital flows. To consider the particularities from these countries, considering the colonial legacy, considering the question of how they have a weak currency when it comes to understanding international monetary and financial system. This is also key, and together with that also goes back to a point Professor Jacquard said, which is to rethink the new standard, should rethink our international multilateral institutions, perhaps going back to some of the ideas that Keynes had about the Bretton Woods institutions, but going beyond that, because we have a different scenario. So I think these are a few points. For developing countries, I think it's very clear that we need to go back to think about a welfare state. We can't organize the revolution now, so let's just set for the welfare state for now. I think has been evidence as well, has shown that developed economies, they've been able to reduce poverty through a strong welfare state. So I think the pandemic really brought that debate back, and how we have to think that for developing countries. I'm very interested in that, why we are not pushing for strong welfare states, not just at the core, but the periphery as well. And if we push for that, is it possible? Who is going to pay for that, and how are we going to pay for that? So this is another thing is in my mind as well.
Yeah, thanks, Carolina. I think this was already half the answer of the last question I wanted to admit. And this is Jillian. She is with us on the panel right now. And maybe, Jillian, you want to put your question briefly yourself, and then we'll have a final discussion round with regard to your question.
Thank you. Good evening, and thanks so much for your really interesting conversations. I come to you from the perspective of the Global South. I live in South Africa, and I work a lot with developing countries. And I also am very concerned about, I work in the climate justice space. So that is the perspective that I'm coming from. And the one question I feel, Prof, that you sort of did respond to, although you kind of laughed me off a bit, was the question about shifting from a globalization to a focus more on localization. And then the second question was about thinking of creative debt solutions. And I just want to say, even though there is a belief that globalization has brought development opportunities to those of us in the Global South, we really don't see it like that. And that's the question for both of you. Thank you.
Yeah, thank you. Maybe Ishac, you want to start, and Carolina then go second?
Right. I mean, Jillian, empirical evidence is something that we should believe in, it seems to me. And it is the case that millions, hundreds of millions of poor rose out of poverty by producing for trade and for export to the rich countries. Now, this has happened and is not happening anymore. It's not to say this is the only way, but it's a method that has worked for a few decades and it's not working anymore. Now, whether a localization scenario would lift boats quickly or not is a question. I mean, you'd still need machineries and technology and therefore capital from rich countries if you want to even leave that out of localization. Then we are really down to a very low scenario. But if on the other hand we can think of localization together with transfer of technology, for example, and I wonder how you would finance a bit of transfer on technologies comes embedded in machines as well. So I am all for thinking for other ways, because we have now no other choice but to think for other ways, and the localization certainly makes sense in the north. Whether it makes sense in the south or how, under what condition, is definitely something to think about. But I'm confused about the way forward for the south, even though I spent my whole life working on development.
Yeah, thank you. And now, Carolina, for you, for the final words.
Yeah, no, it's a great question in a way, because I think we talked a lot about this dynamics between the global south and the global north, but when you have to get concrete, to discuss in terms of the policies, including the climate change is a big issue, right? You see a lot of global south countries buying a climate change agenda that's not even ours, right? I mean, I see in Brazil where you have Chinese and German kind of coming there. It's like, oh, let's have clean energy. And is agenda for countries that have been burning, coal for the last 200 years. We're not, the source of energy is a different one. We have, for example, the focus on a green agenda for Brazil, to look into deforestation, the pollution comes from mining. It's a different kind of climate change research agenda, but that's is a discussion that's difficult to have. But more specific in terms of globalization, I think globalization was already had its backlash since mid of 2000s, and then the 2007-8 crisis reinforced. And I think the pandemic crisis really kind of I think you wouldn't find a economist right now that would say globalization is the way to go, without having some caveats. Although that said, there are economists going back to the Washington Consensus and saying it was a good thing. You check the Journal of Economic Perspective this month, which has 3 or 4 articles on Washington Consensus pushing for like rescuing the benefits from it. So, but I think overall the profession is really skeptical about globalization. I think for me, the point perhaps, Julia, is, and again, I'm going to go back to criticize mainstream economics, I think is what I do best, is to move away. And I think I'm going to add to localization, perhaps the question of decolonization, because it's true. I think there's a lot of scholars within the Global South that are thinking about the Global South and theorizing development within the Global South, which is not really buying to this linear view of progress and development and so on. They are problematized that how is possible to have development within capitalism, what that means for that. What if the Global South countries are not underdeveloped, by some kind of a either corruption or whatever they like to say, but because that's part of, for capitalism or the capitalism to function, we need the Global South that way. Like the economist Celso Furtado was theorizing about that in the 1970s, how Global South countries are a particular place in that global capitalist system, which is very difficult to make them to leave that place because they have a function, have a position to either to provide natural resources, either to have a strong middle class that will consume what has been produced in the global north. So I think the point perhaps for me to add to that localization discussion is how we decolonize the knowledge about capitalism development from the perspective of the Global South. So what is there for us? Is it possible for us to buy into this technological idea, the technological and progress kind of idea to achieve development? Is that the way to go? Because I think this is something that we should discuss. Perhaps it's not the way to go. And I think, there's this myth of progress that I think the Global South would have to challenge at some point. And perhaps this is a very interesting moment because everybody's skeptical about globalization. So it would kind of give a little bit of space for that. And I would kind of finalize that in terms of, I think there's a question for the Global South to face, which is, we like to not relate to classes and the relation of ruling classes in the Global South with the international class, so the ruling class in developed economies. And that relationship is very important because very often the ruling class in developing countries, they are definitely not concerned with the development of that country, but there's a much more individual perspective there, either business orientated or even at individual level when you think about politicians and this private enrichment. So I think there is a question of classes, which again, many scholars from the Global South, from the structuralist discussion, the structuralist stream and the dependency theory stream, that they are touching upon the issue of classes within this global capitalism. What is there for the Global South? And we have to face that challenge, I think, and that is political. But yeah, I think we have to face that discussion.
Yeah, thanks a lot for this final remarks. I think it was a wonderful and very insightful discussion tonight, looking at the crisis that we are going through and understanding that there is a lot of challenges, and we've covered quite a few tonight. And the answers are to be thought of yet. So we have to really move forward in thinking all these challenges through, looking at possible answers, looking at possible ways, looking at policies that might help overcome all these questions. And it shows us that there is not this one way or one standard approach that we could just move on with, but the world has changed, and so economics has to change, and so our thinking has to change. And I think that's a very important path that we are moving on. And it's certainly not the last discussion that we will have about it. And it will not be the last summer academy that we will have to discuss all these questions. So with these closing words, thanks a lot, Carolina and Ishac, for joining us tonight, for your insights, for your thoughts on our topic. Thanks to all of you who have stayed on, although it has been a little bit longer than expected, but it seems there's a lot of interest in this discussion. And for those who could not stay, I mean, the recording is online, so you can go back whenever you like and watch the recording for the full discussion we had. Thanks a lot to you all. I wish you a good night, good evening, good afternoon, whatever you have in front of you. Enjoy, move on thinking about the economics that we need, and come back the next time. So all the best to you. Thanks all. Goodbye.
Thank you. Bye-bye.
Okay, bye.